So when you're running a business and your business become profitable, this is something that you've been working on for many years, for a long time. And you've made personal sacrifices in order for the business to grow and for you to make money and for you to be successful. The least thing you want to happen is for you to overpay taxes, because then what's the point of you growing your business, you employing people, helping the community in which you're part of. At the end of the day, you don't have the right tax planning and you end up spending too much money on taxes just because you don't have the right strategy, the right advice, or the right tax plan, right? So you don't want that to happen. So guess what? A lot of information is available. A lot of tools are available. And it's my job to share with you what some of the options, some of the alternatives that you have in order for you to be compliant with the taxes, making sure that you file your taxes on time and you comply with the tax law, but also that you take advantage of what the tax law gives you as a business owner, right? In order for you to maximize the options that are out there in order for you to lower taxes, right? So there's a tons of options out there. So in today's video, we're gonna be talking about a few of them that I really want you to consider. Number one, if you are running a business, remember that the business expenses are necessary in order for you to sustain a business. The expenses are necessary. Think about it. So how are you going to expand your business if you're not having payroll? How are you going to expand your business if you don't have marketing? How are you going to run your business if you don't have insurance, right? How are you going to run your business if you don't pay rent, right? Or if you have a mortgage? How are you gonna run the business if you don't pay for the loan, right? So all these expenses, guys, like the mortgage interest, rent, payroll, marketing, right? All these expenses are necessary because they're going to support your business, right? In order for you to have sales, right, which is the most important thing, you have to have the right support. Guess what? The support are business expenses. And these business expenses are going to be tax deductions in your business, okay? So think about it. I'm supporting the business, I am growing the business, and what is helping me to support the business becomes a tax write-off. Okay, so that's how I want you to think about it. Yes, make sure that you increase sales, make sure that your business goes up, but whatever it is that is supporting that, it's going to be a tax deduction. Okay, so I want you to make sure that you push sales up, but also have the right accounting system that allows you to see line by line your expenses, because then you know the expenses that are supporting the business, but also the expenses that are going to give you the tax write-offs. Number two, okay, so running a profitable business and you have excess cash, consider investing money in a 401k, consider putting money on a IRA, and consider investing in real estate, right? So what are some of the vehicles that are out there that are not extremely far from your business, right? That allow you to grow the assets and also have a tax deduction. I just told you, you can invest in a retirement account or you can invest in real estate. If you reinvest in a retirement account, you know that the funds are going to be available tax-free, right? When you reach a certain age, and you can then start pulling money out of the retirement account, right? So it's gonna grow tax deferred, it's gonna be a tax deduction, it's going to be an autopilot, so you don't have to do anything, right? As long as you work with the right advisor and the right company. It's gonna be on autopilot, it's going to be managed, right? You don't have to worry about it, it's gonna be set and forget, it's gonna grow, and when you retire, you're gonna have funds that are going to be paid back to you at a preferred tax rate or with no taxes. If, like for example, if you invest in a Roth IRA, right? If you invest in real estate, you can have cash flows, you can have appreciation, right? And also you can have the tax write-offs, the advantages that investing in real estate gives you. What I want you to consider is, okay, so yes, I'm running my business is profitable. There's nowhere else in the business that I can invest in order for the business to grow even more. Therefore, I'm gonna put money into a retirement account, or I'm also going to consider to invest in real estate. Number three, If you're married, if you have a spouse, you have to consider the filing status of your personal returns, right? And the reason for that is typically filing joint gives you a better tax outcome, right? Because the standard deduction can be greater, right? So consider taking a look at the filing status of your tax returns. Like if you choose the wrong filing status, right, or the less efficient status for filing your taxes, you can end up overpaying taxes. You have no idea how many cases I have seen throughout the years of experience working with clients with tax planning services, then when we see tax returns prepared by some other professional or some other agency, that they did not achieve efficiencies just because the wrong filing status was chosen. So take a look at the filing status and make sure that you make the right choice when it becomes about the filing status. Number 4, tax credits. Guys, tax credits are a gift from the IRS. That's what they are. They're a gift, right? This could be child tax credit. This could be green energy credits like EV credits. This could be credits for retraining credits at a state and local level. Research and development credits, right? All these credits are going to lower your taxes on a dollar per dollar basis. Then again, if your tax base, right, let's say your tax liability, call it, is $10,000, right? And then the aggregate of all these credits that I just mentioned, it's close to $10,000 as well, or let's say it's $10,000. The credits are going to offset, all these taxes that you owe. So let's talk about this a little bit more. I don't want you to spend money just to get the tax credits. And you might be saying, well, Victor, you just told us get the tax credits for us to lower our taxes. Yes. However, what you want to consider is the following. If you're going to invest, or if you're going to spend money on research and development, make sure that the research and development that you're spending capital money on, it's because you have a need to have research and development in your business. Do not spend the money just because of the credit. Spend the money because you know that by having the right research and development, your business is going to have an opportunity for you to grow, or for an opportunity for you to find efficiencies. The benefit for that is that your business is going to have a positive impact. The tax benefit is that it's going to give you a credit. Do not spend dollars to get pennies, right? Like, make sure that it's going to make sense for your business, okay, and your finances and your future. The tax benefit would be a credit. Same deal if you're spending money on buying let's say an electrical vehicle. Like, do not just get on a loan for you to buy a car, right? Just because you're going to have a tax write-off. If you're not going to enjoy the car, or there's no use for the car, like, make sure that you're spending the money because you have the need of it, you're going to enjoy it, and then you're going to have a tax credit as a cherry on the top, if you will, right? Just do not spend the money just because you're going to get a tax credit. This coffee is really good. Number 5, make sure that you talk to a CPA. Make sure you talk to a professional that has a lot of experience working with clients that have the same experience that you have, and also understands the journey in which you are in, right? And also understand where is it that you're going. Think about this. The way you want to see your CPA is you want to see your CPA as a partner. Why? Because the CPA has a lot of experience, has a lot of knowledge and tools, and people that work in the CPA firm environment that will give you a lot of value, right? So, like, it's gonna give you a lot of years of experience. If you really think about it, it's like, if you have the right CPA, you're gonna be in such an advantage, because like, all the advice that you'll be getting, yes, it's going to give you a tax benefit, but the knowledge and wisdom that you get by working with a CPA can be greater than anything else. Because with the right advice, with the right consult, you're gonna be able to make better decisions for your business. And then, as I said, cherry on the top is the tax benefits that you'll be qualifying for. So make sure that you always have the right advice, that you have the right conversation, that you have the right systems, the right tax planning in order for you to lower your taxes. You have no idea like how many instances I see every year working with clients where we see that they work with different agencies and they just didn't have the right tax plan, the right systems, and end up overpaying the taxes. And then we find ways for us to help them lowering the taxes and having better strategies that are way more efficient. Again, this is Victor Delerme. Thank you so much for watching, and we'll see you in the next video.